Welcome. In this explainer, we're going to visually walk through a proprietary system known as market DNA. The case study we're looking at today is a chart for silver, also known as XAG. Now, just to be clear, our goal here is purely observational. We're simply going to follow the model's application one step at a time. So, let's dive in. Okay, first things first. We'll start by taking a look at the geometric structure that's been applied to the chart. This framework is the foundation for everything that follows in this documentation. So, what are we actually looking at here? This is the initial market DNA structure laid over the chart. Let's just quickly identify the key parts. You can see several labeled shapes, right? There's triangle 1, triangle 2, and triangle 3. And then you've got that larger trapezoid. And you'll also notice that diagonal line, it's labeled the mirror delay line. These are the core geometric elements we're going to be tracking. All right, let's get into the first documented phase of this whole cycle. This part is all about the entry plan and, the specific calculations that go along with it. So according to the documentation, Phase 1 officially kicks off on February 5th, 2026. That's triggered the moment the price hits the primary entry level, which you can see labeled as M on the chart right at $65. The model also lays out a secondary entry level labeled PC, which is set at $43.56. Now, here's where it gets really specific. The risk parameters. This whole plan is based on a hypothetical capital of $100,000, and it comes with a very strict max allowed drawdown of 10%. You've also got other key inputs, like the trapezoid time duration, which is set at 47 days, and the each trade size is set at 0.01. These are all pre-calculated parts of the model's framework. So you might be wondering, how is the position size figured out? Well, the documentation is very clear and includes a mandatory statement explaining it. It says, and I'm quoting here, both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. The initial plan also has 3 distinct price targets laid out from the very beginning. First up is target 1, or T1, which is set at $72.04. That's described as the mirror line or the lower trapezoid. Then you have target 2, T2, at $94.65, noted as Apex N, which is a safe exit point. And finally, target 3, T3, is at $119.66. This is called the trapezoid top, representing a full exit. Now, based on those targets, the documentation lays out 2 possible return scenarios. Scenario 1 is if only that first entry at M gets triggered. In that case, the projected return is 6.54%. But in scenario 2, if both entries at M and P are hit, well, the projected return jumps to 11.65%. It just goes to show how the model accounts for different market paths right from the start. Okay, let's fast forward in time a bit. We're now going to look at the next big event that was recorded in the source material. This is what the model calls Phase 2. So the big question is, what happens next in this visual record? Let's take a look at the chart and find out. And there you have it. The documentation shows that on February 22, 2026, the price came up and made contact with the mirror delay line. This observable event is what marks the recorded transition into Phase 2 of this cycle. And the source material is incredibly precise about this. It records the exact price of this contact event. The price touched that mirror delay line at exactly $85.97. Okay, so Phase 2 has been officially recorded. What's next? Well, the documentation actually outlines potential sequences for the phases that follow. And just to be clear, this isn't a prediction, it's just a documentation of the model's possible paths. So from here, the documentation lays out 2 potential sequences. The first is what's called the normal path, where the phases just go in order: 1, then 2, then 3, and then 4. But there's also an alternative path, where the model allows for Phase 3 to happen before Phase 2. That would give you a sequence of 1, 3, 2, and then 4. And that leaves us with a question that the documentation itself raises. Will the next phase actually be Phase 3? Well, the whole purpose of this record is to just keep observing the market's progression and to document what happens next, according to the model. All right, before we wrap this up, we have to cover some really important points. These are mandatory disclaimers that come with all market DNA documentation, so please pay close attention. Okay, please take note of the following. First, and this is the big one, this is not financial advice. Second, using leverage above a factor of 10 is strictly prohibited by the model's own rules. Third, Do not invest essential personal funds. And finally, just to be crystal clear, this analysis is part of a public model documentation. It's only for verification purposes. And that concludes our visual documentation of this silver case study up through phase 2. If you want to follow this case study or see others, you can find more documentation at the website on your screen. Thanks for watching.